Hello, everyone. Welcome to another Altos Trading live strategy session. This is Richard Van Rich. I'm here with Jeff Tompkins and Craig Ward in the chat. Well, we're really excited to have you guys with us tonight. Got a lot of new folks on with us, and if this is your first time being on, you'll notice that your microphones are muted. That's so that you can hear Jeff and I talk. But we do have a Q&A box at the bottom of your screen, so put any questions you have there in the Q&A box, and Jeff and I will get to those throughout the evening and also at the end. If you have to hop off for any reason, don't worry, this is recorded and will be available in the members area and on YouTube later tonight. So if you haven't already joined our YouTube channel, please like and subscribe our videos so we can get those out across the universe there. So anyways, before I bring on Jeff, just want to make sure, read the disclaimer, trading securities and options involves risk. Prior to buying and selling an option, investor must receive copy characteristics and risk to standardized options. Investors need a broker to trade securities, and options must meet suitability requirements. Past results are not necessarily indicative of future performance, and performance figures are based on actual trades, including real money results. Due to time-critical nature of trading, broker fees, and activity of other subscribers, there's no guarantee that subscribers will mirror our performance. And performance numbers shown are based on trades users could enter based on the trade signals. And speaking of trade signals or account or anything like that, if you have any questions about your account, access to Zillion, trade alerts, anything else like that, email support@altostrading.com, and we'll get to those tomorrow. All right. So with that being said, let me hand it over to Jeff. So Jeff, if you want to grab the microphone.
Hey there.
There you go.
See if I got my. Oh, that's weird. Can you see me okay?
Yeah, I can see. Pull it up here. There you are.
Oh, hey guys.
It kind of stalled on my side.
Still a little foggy from Vegas last week.
I'm telling you, man. Still catching up.
Yeah. It's good to see. We actually saw a few of our members down there last week. It was great to see you guys. And we got, hey, Jerome, what's up? Oh, good. Glad you made it on. Good to see you, Jerome, on from, we met in Las Vegas last week. Hey, Kalki, JD. All right. So glad to have you guys on tonight. So we have a number of new people with us tonight from Las Vegas. So welcome, everybody. We are going to cover some really great stuff tonight. So we'll start out with our market overview. We'll map out our levels on the indices. We're going to focus on sector analysis tonight because, you know, with the market being crazy and everything, and a lot of volatility and whipsawing and that type of stuff, we want to look for smooth sectors that are performing smoothly. You know, try to get out from under some of this volatility. So we're going to focus on that on our session tonight, and then give you guys an opportunity to share your favorite symbol if we want to look at any charts together. And if you guys have any questions, of course, during the session, it's meant to be interactive. So please put those in the Q&A box, and Richard can relay those to me, and we'll wrap up with Q&A as we always do. So let's get over to the platform. I want to see if we've got our data refresh real quick. Yeah, it looks like we're still waiting on our data refresh. So we'll go over to the broker platform for now, and then we'll toggle back over to Zillion. We got a lot of new Zillion users on with us tonight, so I want to make sure that we're using the platform there too. So let me go ahead and Richard, do you want to stop my video? Or I got it here. Stop my video.
There we go.
And
I think we're good.
Hopefully you guys can see the whole screen. Cool. All right. So let me zoom in a little here. So another volatile day today. And we've got two very strong levels to watch for this week. One being a support, the other resistance. So let's go ahead and map those so that we can kind of see what's going on and what to look out for. Let's see, drawing. Here we go. All right, so our and we're looking at the S&P, by the way. We'll start with S&P, then we'll look at the NASDAQ. So right around the 4225 level, 4200 to 4225 is a major support area. We kind of had this double bottom here in the recent downturn. And last week we talked a lot about how this long secular bull market that we've been in has, in my opinion, shifted to bear market conditions. Even though we're not technically in a bear market, we are kind of in that correction territory zone, which we've obviously got to get to before we are in a technical bear market. So technical bear market is defined as a peak to trough sell-off of 20% or greater. And if and when that happens, we want to watch, because we've actually gotten into technical bear market territory recently. I can't remember if was it last year or the year before, but anyway, it was definitely in 2020 during the Corona crash, but it was very quick. So for a real secular bear market, we can't dip into that, for a few days or a week or a couple weeks even, and then get back out of it and consider that a secular bear market. So we've got to see price stay down in those levels, at least for 2, 3, 4 weeks. And if that happens, then it's more likely we're going to see a longer term sustained bear market. So right now on the S&P, our support that we're watching, and this is kind of a double bottom, we did dip significantly below that 4,200 level on the double bottom because it gapped down. But because it was a gap and then a close above, that's not quite as, this level down here isn't quite as significant. The double bottom is really around 42.25. Oops. Let's line drawer here. But if that 4,200 to 42.25 zone breaks, the next level we will want to watch is 4,100. And you can see that on, what was it? The 24th of February, we gapped down and then price came down to pretty close to that level and then reversed and closed back up. So this is really our double bottom right here. And the vast majority of the time we see this double bottom and this is really important, so take note, with this pattern in the center of the double bottom. So it kind of looks like a W. So to complete that, we need to get back up into the 45.75 to 4,600 level. All right, this chart's getting a little messy now, but hopefully you guys can see that W pattern. That's typically what we see with this. But right now there's just a lot of volatility in this zone right here. So we're seeing some choppy price action there. But if we kind of ignore that and look at the bigger picture and the bigger structure in the market, it's going to be, we're going to be looking for a potential return back up into this 4,600 level, but that's going to be very, very strong resistance. So if we get back up there, I expect we'll see a strong resistance and potential sell-off. So the 4,600 is our resistance, and you can see that's the middle of that W there. Well, what could become a W, right? So we have a double bottom and a double top to look at. And so these are the major levels that we're going to want to watch for support and resistance, and whether or not we stay in this range or we break out. So right now the higher likelihood is we break to the downside. But it's so important to watch these levels because if one of these breaks, it's likely going to flip from being a resistance level in the case of this 4,600 to a support level, or in the case of the 4,200, if it breaks, it's going to flip from being a support level to a resistance level. And that's so important because it can create some really, really good trading opportunities for us. So if we break 4,200 again, and and don't close back above it in the same day like we did on this candle, and it actually breaks and trades below for 2-3 days, let's say, then we have very strong short opportunities on a bounce back up into 4,200, because that's generally what's going to happen is, price goes back up into 4,200 and then goes back down again. So right now we're in a bit of a tough situation with the pattern and price action, and anywhere within this channel on the S&P from 4,200 to 4,600 is going to be a bit challenging to trade. Now, if anybody on the session tonight is using strategies or a system that works around channel trading, I think that, again, this isn't personal advice, but just my opinion, that 4,600 is a good sell zone if price gets back up there for shorts. But I don't think 4,200 would be a good buy zone because of the change in the market structure and my belief that the secular bull market is over, and we're likely to see more of a bear market moving forward. And the catalyst behind those being, there's really three. One, the market got too overvalued at previous highs, right? So when we were up here around 4,800 on the S&P, too overvalued, right? So that's one. And two are more like geopolitical things. We've got, well, one is kind of more domestic, but it does have a major impact on global economies, is inflation, right? So rising interest rates are on the horizon. We've got inflation higher than we've seen it since, I think, like the early 80s. And then, of course, more recently, we've got the Russian-Ukraine issues. So there's a lot of bearish catalysts going on right now in the context of overinflated prices in the market. And, the fact that we've been in a bull market for so long. So that's enough to shift to a secular bear market. So I don't want to be a buyer, particularly at 4,200, unless I see it hold like it did here and here. If I see another rejection off 4,200, I might be like a very short-term buyer. I'm looking at like a short-term trade of a couple of weeks or less. But I'd rather be a seller on a break of 4,200, a retest, and then get in, at a relatively low risk touch point on 4,200 and look to see if that holds as a resistance level, and then price goes back down. Those are going to be these zones right here are going to be our easier trading opportunities around these levels. Anytime we're in between those, it's going to be more challenging, because you're going to get, these levels are very, I didn't make them up, obviously. They're there, and they're very closely monitored by institutional traders and investors. So that's kind of the rationale behind that, and the reason why this is choppy, and we're seeing a lot of volatility, a lot of wide range candles in between this zone, because it's really a battle. It's kind of like our own stock market war going on right now. It's like bulls and bears are fighting in between this zone. Whenever that fight gets extreme, it becomes challenging to trade, because we had two big up days off this 4,200 level, and then a push down 4,400. So that's another level to watch, more near term. So I'm talking like more over the next day or two, is 4,400 as resistance. Because see, we couldn't break through it, and today we sold off from that level, and then we've got strong resistance around 4,300. Sorry, support, not resistance, support. So see this here. All right, and then today we hit that level. What was our low today on the S&P? It was 42.79. So we went below the 4,300 level and then closed back above it, which has some bullish, very near-term bullish implications. But what this did is it actually helped us out. If you know how to read and analyze this, it actually helped us out by giving us some good levels to watch within that larger zone that we looked at between 4,600 and 4,200. So we've kind of got this channel to watch. And the reason it's significant is because of this area of support. We saw a huge move up off that 4,300 level back in September, October. We got a pretty nice move up off it there in early August. Also the move here. So that resistance broke right here and held and then moved back up. And so we've got two very good levels to watch shorter term. And we basically almost, that was almost the range of today's trading. We didn't get up to 4,400 on the high, but you can see this candle here. That was almost the range from today. So I expect, unless we get consolidation tomorrow, that over, the rest of this week, Wednesday, Thursday, Friday, if we see a break above 4,400, then I expect this W pattern to complete itself up into 4,600. If we get a break down below today's low, then we're looking at, again, at 4,200 support. But it's unusual if that happens so quickly after hitting this second bottom off that 4,200 level to create this double bottom pattern. Then I don't think we're going to see this W pattern complete, and we're going to be looking at significantly lower prices on the S&P. So that's, that will probably play out over the next couple weeks if we do go significantly lower. So we can map those levels out on our next session next week on Tuesday, because I don't think we're going to, with 3 trading days left in the week, I don't think we're going to break too much below 4,100 if we even get back down to that level by Friday. But we'll keep an eye on that and then map out those levels for next week, because 4,100, 4,000 is a millennial mark. For those of you who are on tonight that are new or just joined us from Las Vegas from last week, we call these century, half century, and millennial marks. So a century mark would be a 100 level, so 4,200, 4,100, 3,900, and then half century would be in between, so it'd be like 3,850, 4,150, and even without any price action around these levels, they should be monitored, because they are watched by institutional traders. And you'll often see, even in the case where there's never before any price action at that level, you'll see price either reject it or use it as support. Perfect example right here. All-time high in the market from back late in the year last year, towards the end of December. We had never been up at this level before on the S&P, but look, that's no coincidence, right? The sell-off occurred right around 4,800. So that's a century mark. And then millennial marks are extremely significant. So this is the 4,000 level. If the sell-off continues and breaks 4,200 or then 4,100, 4,000 is going to be major support, major. And let's see, let me expand out more than a year in time to see when we were last at the 4,000 level. All right. So you can see, and there was a lot of resistance around there. So it was back in early 2021 that 4,000 was major resistance. Okay, so at that time we'd never been up at 4,000 before, right? So you can see we resisted that a couple times and we had some price consolidation. But once 4,000 broke, look at the power behind that move once a millennial mark breaks, right? So if 4,000 breaks, holy cow, I'm not talking about just trades below it on 1 or 2 days, like it breaks like it did here and moves far beyond it, or it breaks, into the next century mark, let's say like 3,900, and stays down there without going back above 4,000, then we've got a lot of really good short opportunities below 4,000. And if a millennial mark breaks to the downside, if we get a sustained break, that's often, and especially in the context of a shift from a secular bull market to a secular bear market, going to give us some really powerful short opportunities to the downside. Okay, and then we can start, if that happens, we can start looking at other levels of support. So that's the kind of the consensus on S&P. So any questions there on the S&P, Richard?
Let's see here. No, Rob, Ronan's asking something more specific about hedging for a downside, but we can probably get to that a little bit later. But about, the structure itself, it's pretty incredible, though. I mean, the fact that, we were able to look at it, how it's respecting these levels like this. And I think it's good you kind of, just in case for you folks may have missed it, you were saying you really wouldn't be looking to go long at the bottom of this range, but you'd be more likely to go short at the top of that range between the 4,200 and the 4,600.
Yeah, and the reason for that is it's pretty unusual to see a triple bottom in such a short period of time. So if we get back down, I'd be surprised if this 4,200 level held. But if it does hold, like we hit it, and then price moves off of it, like up into the next half century, so that'd be 4,250 or 4,300 level. I probably wouldn't be a buyer in 4,300 because you can see that would be resistance there from today and from back in September. But yeah, exactly right. That's why it's so crucial to map these levels out, not just on the indices, but on anything you trade, stocks, forex, futures. I do this on anything I'm considering trading. And what it does is it helps you, number one, it helps you be prepared ahead of time for any buying or selling opportunities. And it also helps you prevent trading on the long side into a resistance level or on the short side into a support level. Because that's where a lot of people get in trouble, is that they don't see, for instance, a resistance area and they go long, or they, buy a call option or whatever their bullish strategy is, right up into a resistance area, and it hits that and then gets rejected, and the trade moves against them. It's a huge mistake people make. So that's why we start out our live sessions doing this, mapping these levels out. And it's why I emphasize it so strongly, because it is a good window into the future. If you do it, do your homework, do it the right way, look for the levels. And even as I just mentioned, if you don't see, it's a level we've never touched before, like in the case of late last year to early this year, because I think it was January 4th that we hit the last all-time high on the S&P, where I've got my cursor here. Price had never been up there before, but the high was 48.18. So what if you had already mapped out 4,800, because it's a century mark, and you were ready to treat that as resistance? Or if you were looking to go long, you were waiting for a confirmed break of 4,800. So that would require and we never did close above it. See, and this traps a lot of people. This was a classic bear trap right here. So I would never go long into a century level until it proves itself as support. Because see there, we go up to 48.18. It traps a bunch of people. People are, may have had, stop orders above that level to go long, and then price closed back below it the very same day. So we break 4,800, and you'll see that happen a lot. You'll see a century level break and then reverse the same day back on the other side. That's a trap. And that's exactly what happened here. We wouldn't have a market without it. We got a bunch of buyers here. I guarantee you on January 4th, we had a bunch of buyers coming in above 4,800, and then the sellers come in, trap them, and and then all those buyers, as price starts to move down, panic, unwind their positions. So you're getting a double whammy. You're getting not only getting long buyers selling for a loss, you're getting short sellers that are accelerating the down move. So it's a double whammy, and that's why this was such a big drastic move to the downside so quickly. That's why sell-offs or down moves in a stock or the market on a whole are so much more significant or dramatic than a move up, because an up move in the market requires a lot of buying with very little, only temporary selling. So it's generally profit taking. So like on this big trend right here, you get buying and then a little bit of profit taking, then you get buying a little bit of profit taking. So that's what this kind of double whammy situation is here. When you all-time high in the market, break a major level that's never been touched before. It's a century mark, 4,800. It reversed in the very same day. I mean, this day, January 4th, and I did short back. I shorted the market heavily back in January for the exact reasons that I'm telling you now, right? Because I saw this bear trap right here, and that day, January 4th, was a major warning that the markets were going to sell off.
Hey, Jeff, while you're kind of talking about going through levels, Stephen had a question. He's saying whenever you're talking about breaking through a level, are you talking about closing above or below a level, or even intraday if it just kind of wicks through it?
Yeah, definitely never intraday. So we're obviously looking at a daily chart. I don't want to buy on a century mark break intraday because of just what I showed you here on January 4th. So what I look for is a break and then a retest. And so it's kind of a three-step process. Let me see if I can find this is kind of a longer term one, but this is a good example right here. So this was a level, right? 4,500 century mark. And guys, when I say these levels, like it's not going to be exactly, I didn't draw that very well. Let me redraw it. It's not going to be necessarily exact. So you just kind of want to watch around that zone. This one was pretty close to exact. Let's see what the low here on December 3rd was. So it's just 5 points below, a little less than 5 points below 4,500. So just treat it more as like kind of a zone, but this is a good example. So this requires patience, but it pays off. So when this broke 4,500 level, okay, we got an up move. And what happens is a lot of people it's so heavily based in psychology. People don't want to miss out on an opportunity. So especially when it comes to money. So in this case, it would have been okay to take this breakout trade. You would have done fine. But what almost always happens when you get a breakout like this, you didn't miss the opportunity. Okay, you did not miss the opportunity. Price will eventually stall and then come back down to that level. So see how that happened here? It just took a little while. So it took from early October to mid-November. But if you were patient and you waited for it to come back down to 4,500, if you were very aggressive, you could buy at 4,500. But what I do is I wait for confirmation that that level is going to hold. And there's a couple ways I do that. I want to see at least 2 to 3 days of closes above that level. So here we came down here on December 1st, rejected it with very bullish price action on the 2nd. The bears tried to drive it back down to that level again. This was your biggest clue right here on December 3rd. See, bearish candle, but bears could not push it below 4,500. Came back up and closed there again. This is where, if you were patient, that you're going to have the highest probability jumping in on this hold of 4,500. And obviously, there are a lot of ways that can be traded, but you got to move back. You got to move from down around 4,500 to 4,550, depending on where you jumped in. all the way up into 4,800. And what I'm showing you here applies to anything, not just the S&P. But I really believe in starting with the S&P and the NASDAQ, the major indices, because if we do this first on the indices, and then we go do it on this, run this exercise of mapping out levels, looking for support and resistance and rejection or confirmation of those levels holding, then we can start looking at individual stocks or ETFs that would exhibit similar patterns. And my probability, of having a successful trade went from a coin toss 50-50 to probably more like 80 to 90%. So it can make a big difference on these levels. And here's why you don't want to just buy off the 4,500, because here we had another retest. But remember everything we just talked about with this rejection of 4,800. If you had been aggressive and bought a 4,500, you would have gotten hurt fairly badly. But the good news is when a major level like 4,500 breaks, we often get a retest, especially on the major indices. So, the major indices are very reliable for retests of these levels. But you would have had to, if you didn't exit, a long trade on this break, you would have had to ride this thing down and be, patient. And this is actually to answer that question about hedging. If I did get trapped in something like this, like I was trying to go be aggressive and buy off the 4,500 level, and then it broke, these would be scenarios where I'd look at hedging with options. So like if I don't buy shares of the SPX, but let's say I did, I could hedge with a put option, or maybe I had a long call or a call spread on the SPX. I can hedge that as well with put options. And then when I do that and I hedge, I'll take the hedge off if I'm wrong, but in this case, that level broke and we got to move down into previous support. And there it is there at a century mark around 4,100. Then I can look at taking the hedge off at a major support level. And that actually would have been picture perfect right here. If you got caught in this, you could sell your puts. You would have made a bunch of money between 4,500 and 4,100, or sorry, not 4,100, 4,250. And then that protected you in this whole sell-off zone. And then you can leave the long position open once you take the hedge off and wait for the retest of the resistance area. It's a good question. All right, let's look at the NASDAQ real quick. I'm kind of going a little bit longer than I wanted on the market overview. But fairly similar picture here. So we don't have to spend a whole bunch of time on this, but just want to give you guys the levels to watch. All right, so we've got the same W pattern. Okay, so 13,800 is support. Um, 14,200 that we rejected today is resistance. It's kind of more of a zone. Let me actually see if I can draw this as more of a zone. So so we've got right around 14,200. But the fact we rejected that today is, something to pay attention to. So this is kind of more of a zone right here that we need to keep an eye out for. But you can see we had around 14,400, another century mark, major support and strong move off that level. Okay, that was rejected. Let's see, earlier in February, and then 14,200. You can see we've got not quite up to that level, but we've got some resistance there, minor resistance there, major support here. So that could potentially keep prices down over the next couple of days. But if 14,200 then breaks to the upside on the NASDAQ, Then, like I said, with the S&P, I expect we'll see this W pattern complete itself up into the 15,000 level. So that level is major resistance on the NASDAQ, 15,000. It's a century mark, and we've got major resistance support here, which it never really saw it come back down, and we never saw that level hold after it broke it. But you can see we've got a lot of resistance and support, and that also makes it a stronger level. If you see resistance and support, so this was resistance. See how price moved down off of it. We had support because price was just bouncing off of it all over the place over here. We had more support. It broke, came up. See this little doji candle we got here. Resistance, moved down, finally broke. Moved up off. You can see even on the middle of the W pattern, it served as support just for one day. But it was more resistance because we had 3 days of price hitting that 15,000 level and then moving down. So if this W pattern completes and we get back up into 15,000, very strong resistance. Based on all those touch points, the moves off of those touch points, and the fact it's a century mark, 15,000. And then let's take a look at the VIX really quick, see what the VIX is doing, because the VIX gives us clues, remember, about whether the market is likely to go up or down in the near term. So the reason we may be near a bottom is we have strong resistance on the VIX. Let me zoom out here. So remember, this is all very near term. We're talking 30 days or less. And when we're up near one of these levels, it could be as little as a day or two. But 35 to 40 is our major resistance zone on the VIX. All right, and you can see that. And the VIX is, when the VIX goes up, generally the S&P goes down. When the S&P goes down, the VIX goes up. Okay, so this is the major zone to watch on the VIX. If the 35 level holds, then that's our clue that the W pattern I just showed you on the S&P and the NASDAQ is more likely to complete itself here in the near term over the next week or so. Yeah, we've got very strong resistance, but we are obviously in volatile market conditions. VIX closed today at 33.32. That's a high reading on the VIX. Okay, but the good news is, especially if you're more of a bull or you've got a long bias, this is definitely finding resistance around 35. So if 35 breaks, that's our clue that we're going to see more sell-off, more selling over the probably the next week or so through at least this Friday. But if 35 holds tomorrow, and the VIX goes down, then that's my clue that I can jump in for a short-term long side trade. So I might look at like buying E-mini S&P or NASDAQ futures if this 35 level holds and it moves down. So we'll go ahead and pause there, see if there are any questions, and I'm going to get over to the Zillion platform.
Let's see. Steven's just following up. If the W does complete on these guys, is it likely then to go back down from the right side of the W?
Yeah, exactly. Yep.
Okay.
If that level holds, yeah.
Okay, that's all.
Okay, let's see. Did we not get our update yet? Data update's coming in a little late today. Let's see if it's up on the indices. Okay, it's updated there. All right, so let's look at our gauges. So risk right now is fairly high, right? So we were kind of in the mid zone on that recent rebound that we saw off that double bottom, but risk is increasing again. So this is where I want to be a little bit cautious and really wait for you know, a confirmation of any trades that I place for a level to hold like we just looked at. When the risk gauge is in the lower zone, that's where I may be more aggressive and actually buy or sell off of a level without as much confirmation. But the higher risk goes, the more confirmation I want. We're kind of in a choppy zone. So anytime we see our trend gauge in the yellow, trading conditions become more difficult. When it's in the red, short trades are tend to be a little bit easier. When it's in the green, long trades tend to be easier. We don't run into as much chop, and trading. Our life as traders becomes easier. So it's this yellow zone. So we're in like I mentioned, a difficult situation because we're stuck in this zone right now. But I think we'll get out of it soon. We do have slightly more buys than sells due to the recent rebound off this double bottom. But overall, we're a bullish. And looking at the divergence cloud, we're still in this red cloud. So any long trades that I take are probably going to be fairly short-lived and move quickly. And my higher probability, bigger moves are likely to the downside. Conversely, in the green cloud, we had some nice buying opportunities off the lower support levels. So the red cloud's helping us out right now to look for short opportunities versus buy opportunities until we see that switch or we're not in a cloud. So for what I wanted to talk a little bit about is sector analysis, because what we want to make sure we're doing is that we're number one, trading with the broader markets in terms of direction, but within that direction, selecting either the higher performers if we're in bullish conditions, or underperformers for bearish conditions. We only have really one positively performing sector right now, and that's energy, XLE. So do you guys trade like oil? Or oil like went up. I don't know. I'm going to actually look over here on my other screen and see, looking at the oil futures. It went up like crazy today. Just see if it hasn't. Okay. So if we are going to look for long trades, energy is going to be our best bet right now. And all you have to do is just click on that. It's going to give you your energy stocks, right? And everything we just did on the indices, you want to do on any of these stocks that you're considering trading. But we've got more opportunity on the downside. So financials are getting hammered, materials are getting hammered, tech's getting hammered. Okay, so financials right now might be a good place to look for some short opportunities. You can see that a lot of these have gone down high percentages today. So what I might want to do is look for sort by stats and look for stocks that have high profit factors. So like BK, Bank of New York Mellon, has a high profit factor. Anything over 1 is very, very good. It means it's profitable. You get over 2, that's extremely good. And this is basically the stats for our algorithmic signals. So that doesn't mean there's a trade opportunity there. We still have to look to see, we don't want to trade into a support level. There's already been a really strong sell-off here. There's actually a beautiful signal here. Let's out of the way. There's a sell signal from Trade Trend, February 14th. If you had entered your sell stop order below the low of the candle that day, on day 3, you got a really nice entry, which would have been, let's see, the entry was at 60.60. So you can see that up here. Right there. So when that sell warning came in right here, it would have given you your sell entry price up here on the chart. That would have been at 60.60. And we're down at 50.58 on the close today. That's a 10-point move and about 2 weeks. It's pretty awesome. And it was off of strong resistance level. I mean, these are your bread and butter opportunities right here. See the move off that level back in early 2022, hit it again, rejects it, we get a sell signal, huge move down. So just because, the sell-off's already, extended itself. Let me see if we're hitting a resistance. Yeah, so we're close to major resistance. See down here? So there's currently not, it's an open trade on this right now anyway. You can see the trailing stop levels here from this sell signal. Okay, so all the way down on this move, you'd be moving your trailing stop. Right now it's around 54, or you could get out. And that's the beauty of, attending our sessions is I'm teaching you this stuff. So if I were in a short trade on this right now, which I'm not, I'd be looking to get out around between 49 and 50 because we've got this major support level here from back in September. Look at that huge move off that level. This level is going to likely hold to some degree. So I wouldn't wait for the trailing, BK to move up, bounce out this level and hit my trailing stop. I would be looking to take profits between 49 and 50. But currently no signal on this one. I just saw it at the top of the list and it had a high profit factor, so I pulled it up. So what you'd want to look for, obviously, are opportunities with recent sell signals. Okay, so Capital One Financial had one today. Big move though into support. I'm going to ignore that one. Let's look at HBAN. Not familiar with that name. Also big move into support, so I would ignore that one. FitB, Fifth Third Bank Corp, sell signal. This one might have a little room to run. I have to really look at it. Yeah, we're in support again. You see all this consolidation. So it takes a little while to look for these. The more you do it, the more proficient and quick you'll get at it. I mean, I can look at these within under 5 seconds. I can see if it's one that would make sense because I've done this mapping so much for so long that I can do it within seconds. I can see the levels without even drawing them. Like this one, there's support. See, so we don't want to trade in support, but that doesn't mean it's not an opportunity. I just want to wait for to see if this level doesn't hold. Let me draw that a little better. So you can see that major resistance, a little bit of resistance there before it broke. Resistance, resistance. I see touches all over that 177 level. So if I were to take this, let's see what to the short side, let's see what the suggested entry is. So we have a pending sell at 176.17. So that's going to be just a little bit below this low. If I'm aggressive, I could put my sell stop down here, a bit lower, like around 175.50 to 175.75. I want to make sure I'm below this, but that's pretty aggressive. The other way to play it is what we've been talking about tonight is wait for that level to actually break. So you don't get into a trade that bounces off. See if it actually breaks, then wait for it to come back up and retest, and then see if that holds. And then you can get aggressive because you've got a big move down there into support. All right, so see this support down here, 152. All right, we've got major support. That's a lot of room to run. That's a trade that, if you bought put options on would, you could see from a 170, let's say a 177 entry to the short side down to 152. It's what, 25 points on a 175, that's a 300% return on a put option right there. If that this level breaks, retest, and then you use that as resistance to sell. So that's more of a conservative way to do it, or If you were just to take it off this sell warning, your sell stop would be placed below the low of the candle at or below the entry price suggested by the algorithm right up here, 176.17. So that's how we want to use sector analysis to find opportunities. So we want to first look at, what is the overall market doing? Do we have more top performers than underperformers, or more underperformers than top performers? Right now, we have more sectors that are getting hammered than we do sectors that are doing well. So this is where my focus goes. And then I want to start looking at the ones that are, and that's why we built this into the dashboard. I want to look at the top 3 underperformers, and those, you get those automatically. And the fact that we have more underperformers than top performers tells us, market conditions are bearish, especially when we look at them in the context of market sentiment. And then I can simply look through these for sell signals, because these are underperformers, so we don't want to be buying them. We want to be looking for selling opportunities, and sort by signals. And we can simply click this sell column to look for ones that anything that has a 1 in it is a sell pending signal from today. This one, it has a 3, so there, Willis Towers, it had a sell signal from a few days ago, 3 days ago. So if you want to look for the more recent opportunities from today, you look for the ones, and those are in a yellow down arrow. And then also we can look at our stats. So like, if we click on one here, look at Huntington Bank shares, and we look at the statistics. Okay, I want to make sure that statistically, it has a good profit factor, but I want to make sure it has a good profit factor on the side that I'm trading it. So if I'm looking to short, I want it to have a profit factor above 1. In this case, it has 1.3. And back test results going back 5 years are profitable. So that's what I'm looking for on the stats. If you don't have Zillion, you can back test on your platform, or look at the signals manually to determine that. But we've made that easy and automatic to do in the statistics section of our dashboard. All right. So I'll pause there, see if anyone has questions on sector performance and how to use it to find opportunities in the market. And then we can take some suggestions for a few signals. Sorry,
would you ever consider, like let's say you missed the sell warning? Would there be like any period of time, say like no more than 1 day, 2 days, or 3 days that it's been in the trade, you would potentially get in? Or would you just say after it's been confirmed, you just don't really want to mess with it?
Yeah, absolutely. So like we talked about, if you do miss one, like on Huntington Bank shares, I can very quickly spot a major support level, and it was rejected a little bit today. See, price went down to this 14. It's kind of a quarter century mark, more like 1425. I see touch points from way back here. So even if you miss this, as long as it doesn't move into the next support level, and it comes back up to that resistance level, because remember, when support breaks, it becomes resistance. When resistance breaks, it becomes support. So this is right now, it's a support level. But if it breaks, then it's going to be a resistance level. So what you want to do is you want to, if you miss it, or maybe you spotted it and you didn't miss it, and you just want to added confirmation that the short signal is going to have a better chance of playing out, wait for it to break, come back up, and wait for the retest of that level. And that means waiting for price to hit near that level and then close lower. That's our confirmation. And then we can look for short opportunities back down. The only scenario where you wouldn't want to do this, wait for a break and then a retest, is if it breaks so dramatically that it hits the next level. Right. So the next major level I see is at 13. See that? Boom. So that was support. It used to be resistance. Remember, when resistance breaks, it becomes support. So it broke right here. Okay. And here's a good example to answer that question. It broke resistance back here in December. In one day, it moved up into the next resistance level. Okay. You don't get a very big move when it already hit resistance. And this, a lot of times it won't even move further. In this case, it did, but very little, and then came all the way back down and retested that level. So see how this was such a better buying opportunity than way up here. Okay. You're talking about, over a point on a $14 stock. Okay. So, somebody who may not be as experienced or know exactly what they're doing is likely going to buy up here, whereas a more patient, experienced trader will wait for a retest of major support and then the rejection to get in at a better price. And that was all down in here. So had you been mapping this out, you would have been ready for it. And let's see, we actually did. We got a buy warning right there on the rejection off of that level. And by the way, this is kind of fun. I always enjoy sharing this. People that have heard me say it are probably getting sick of it, but we don't build support and resistance into the algorithm whatsoever. It doesn't, our algorithm has no idea what support and resistance is. So the interesting thing that emphasizes how important what I'm sharing with you guys tonight is you'll see our signals off these major levels. So it's not because that's built into the algorithm, because this takes manual homework, right? To find these levels, I have to visualize them, see the touch points and draw them. Our algorithm can't do that. But interestingly, you're going to see these buy signals. Well, why is that? Because that's where there was buying or selling pressure. And so these levels form themselves. So our algorithm, and it's a testament to the power of our algorithm, because our algorithm can spot these buying and selling pressure, even if it occurred long ago. So this selling pressure off this $13 level, this buying pressure off this $13 level, then happened again twice, two more buying signals, all the way, into July and August. So, 7 months later, we got the buy signals. So that's really what I'm looking for. I'm looking for these buys and sells off of a major support or resistance level. So you look for sell off resistance, buy off support with a little bit of follow through, right? And if you miss it, that's okay. Wait for a retest. There's your retest. You had another opportunity to get in. And sometimes they come later. Like here's a buy signal. This one would have been awesome, right? Big move off 1450 all the way up into the $17 level. By the way, that's resistance. Look at that. More like 1675, quarter century mark. So 1675. Okay, we got all these. So I would have known that's resistance if I had mapped that level out back in early 2021. Wouldn't have come as a surprise to me. Got a sell signal, move. Okay, but so I got ahead of myself, but this was the buy signal I was talking about right here. Okay, if I had missed that, look what happened here. So that buy signal was back in early September. We got another one in early December, another big move off that level. So if I'd missed it, I would have had to wait a while, but that's why we have a really nice watch list feature built into the platform. So if I see one of these, what was that on? Huntington Bank shares. I'm just going to take this, drag it right into my watch list, and there it is waiting for me. So I can keep track of that and monitor it. So I don't have to wonder when I see one of these opportunities, where did I see that again? I can't remember. No, just drag, put it right into my watch list. And then I know, and then you can leave all your levels mapped and stuff. So then you're ready to go. And when December hit, in this case, I would have been ready. Got the buy signal. I go, oh, that's in my watch list. Oh yeah, I mapped out that $13 level 3 months ago. Oh wait, just got a buy signal. See how that, even if it doesn't happen right away, how that can set you up for success in the future. So it's all part of the process. Shoot, we're up on the hour. Are there any symbols or major questions we want to?
There's a couple. ADM is one that came up earlier.
ADM, is that Archer Daniels? I think.
Yeah.
Yep. All right, so good example to share, because this is what I avoid. I don't want to take a buy signal off of a near a high, at least a high within the year. So going back a year, this is a high, because especially when there was a sell signal off this level. So sometimes it will work out. In this case, here there was a buy signal at a previous high, and it did get a bit of a move. But even if you do get a move, it's probably not going to be much of one. This one did come down and retest. But see how that method that I showed you guys tonight is added confirmation, because it broke, didn't really move a whole lot, came back down and retested. So rather than getting up here, on this buy signal, plus you got to sell right here. So there's a lot of resistance, and we got a bearish rejection around the 80 level. So this isn't a buy signal that would entice me or attract me. I'm looking for buy signals like down here off of support. Here, this one was the best buy signal I can see on this chart. So right around 63. So we got a major, see, resistance. And the more touch points you see at these levels, the more significant they are. See how strong that resistance that then became support. Okay, this is your break right here. There's your retest. There's your break. There's your retest. There's the buy signal right off 63. So that was a move from 63 up into the 80 level. These are the ones that I would want to be looking at. Some of these down here, actually, I wouldn't have. It depends on your strategy, but these second three buy signals, still got a decent move, from around 63 at the top of that range. But it's not a very big one. This channel is very tight. So that's another thing I try to avoid is tight channels, signals within tight channels. Because unless you're channel trading and you're using ranges and stuff, and you're just looking for a couple quick points, you're not going to get a whole lot of move until that range breaks, and then it retests. So we're looking at a couple point range here, 3-point range maybe at best. Although these buys occurred off of a support level, what did I say a little bit ago? You don't want to buy into resistance, and you don't want to sell into support. So if these signals weren't bad ones, but you want to play them a little bit differently. You want to wait for the resistance to break so that you're not getting trapped, and then you want to wait for it to come back down and retest. Okay. And these didn't retest this first resistance. They retested the second resistance that I didn't draw there. Okay, right here. Okay, so sometimes you'll miss these, there's plenty of trade opportunities that I miss because we don't control the market. We don't control anything. All we can control is our analyzing these levels and how we trade off of them and our risk tolerance. Those are the things we can control. So sometimes I miss these. Sometimes if I had was interested in these 4 buy signals, but I was waiting for a break of, let's say, the 61 level. Here it did, I guess, come back down and retest. But let's say I was waiting for the 63 level to break and then a retest of 61, I would have missed that one. But if I was, being more diligent and I saw this break right here, so see these resistance areas, the break, and then the retest. So that retest was pretty much right down to that where these two resistance levels were. And there's a buy signal right there. There's one. And then we got a second retest. Okay. This probably would have trapped people because it traded below the level. But if we were patient and waited, there's our buy signal. This is the one I really like because we got a retest twice of that level. I can see people getting trapped right here on a break of that level and then a trade back up. That's why I like to wait for, several days for a level to break before I consider a confirmed break, so I don't get trapped. And then there's the buy, and that was really the best signal. All these other ones were, good signals, but they were within tight channels. So you can't expect as big of a move without encountering support or resistance.
Okay. There's a handful of others. I know we're bumping up on the hour. You want to look at maybe just one more?
Yeah, or maybe if there are just more general questions that we can help answer, we could look at one
Yes.
more symbol and then wrap up with like final Q&A, make sure there aren't any lingering questions.
Yeah, well, while you're on this page, someone was asking, how do you add something to the watch list again?
Okay, so there's two ways. You can either drag and drop. So you just click on the symbol from your scanner, and then you'll see the drop here flashing. And you just drag it right in there, and then go over and you'll see it's right there. And then you can click on any of these and they'll populate on the chart. Then you can go back to scanner. Another way to do it is just to right click your mouse on one of the symbols and click add to watch list. That was for Everest. And I go over to see Everest is there in my watch list. And I can quickly pull it up on a chart here.
All right. Looks like most of the questions are kind of takers. One person asked general, do you ever use volume profile planning your strategies?
Yeah, I've gotten that question before. I don't use it a lot. So volume profile, if I'm thinking of the right one, is where it shows volume at price. So like it'll show you how much volume was at a certain price level. Yeah, it's good to look for, because if you see, especially when you're using it, that's a good question because it's relevant to what we're talking about. So like if you see a lot of volume off one of these levels that we talked about, let me just make sure I'm even, because this has different names in different platforms. Yeah. So so it's going to show you the volume at price. It can help you kind of give you clues when you see in the context of a trend, like see this big uptrend in Everest, see the volume starting to thin out as it reaches higher points. That can help you kind of give you confirmation that the trend might be losing steam. But the problem is you can't use it as a standalone because this was thinning out way earlier at lower prices. I mean, it was thinning out down here around 296 and it still went up into the 308 level. So it's ideal to use it in conjunction with things like support and resistance and our algorithmic signals. So like when you see high volume off this 272 level and you see, and we had mapped that out as a support level, and then we see buy signal off of it, it's kind of added confirmation that we have a lot of volume near those levels. That's a good question.
All right. Let's see. Let's maybe look at maybe one more. T Murphy put up DPZ.
All right, so let me get this profile off of here. All right, so we've got a open buy on Domino's. Okay, this is a good one. I like this. Because I can very easily and quickly spot a major support level. Maybe more of a support zone, but it's also a century mark, 400. So that level held. See that from, let me get my other drawer right here. See how this was major resistance going back to late 2020? See how price finally broke it back here in April? didn't get too much of a retest. This is all within the context of a green cloud. But the real retest just came. There it is. And there's a buy signal, buy warning. Big candle here, big bullish candle after a long down move. You know, obviously, as much as I wish I could tell everybody this is, you know, a guaranteed winner, we can't do that. But this is what I'm looking for the higher probability opportunities. So this is a good spot. Who found this one, Richard?
This was, they didn't have it was T, not their first name.
Okay, well, nice job. I mean, yeah.
T Murphy.
Yeah, okay. So very strong resistance. It was broken back in April and retested and a buy signal. And if you look at the past buy signals off this level, anytime like I get a buy signal, I want to see, were there any signals, similar signals off that level in the past? Well, there was one right here. And did it do well? Absolutely. Price moved way off that level. It's not a guarantee. It's not, I wish it was, or, you know, I put my entire available capital into the trade, but it's not, but to me, it's a higher probability opportunity. 400 strong level, century mark, buy signals, big price moves off that level in the past. And for a long opportunity, so this one's already triggered yesterday. The trailing stop, let me clear these out. So the trailing stops is right here, 390. So I like that the trailing stop is below that 400 level. I got some room for this one today. We closed up at 432.21. Okay. So if I had taken this trade, what do I want to look out for? Resistance. Well, we hit it today at a half century mark, 450.
Hey Jeff, does it look like the divergence cloud did just before it too? Or like how it's red?
Yeah,
Like
it looks like I'd have to confirm with the scanner. It looks like we might still be in the divergence cloud, but it's kind of starting to fade. So
yeah.
I'm probably not going to give that as much weight. It was very thick, obviously, in this major sell-off part, but it's fading. But what you know, I guess, I mean, this one, I probably would have taken, if I would have taken this buy trade, I would have already mapped out this 450 level. I wouldn't have taken this trade if I hadn't been aware of that 450 level. I probably would have taken half of my position off today when we came up near that level. Obviously, anyone that was long dominoes today did take profits off. How do I know that? Because we traded down off the high, which was around 450. So we traded 20 points down off the high today. So even this is a big bullish candle, it didn't close near the top because there was probably profit taking up at this 450 level. There were enough people out there that saw what I saw and just showed you that there was a major support and buying pressure there, which then became resistance. So now we're having to fight 450. But if 450 breaks, then you know, there could be very significant upward price potential because there's not a lot of resistance up till we get up into like 500, 510. There's a little bit here around 465, but again, that's the value, and we'll get into, you know, that's in past sessions, and we'll get into that more also in future sessions. But that's where money management becomes so crucial because you could have taken profits off the table up here around this resistance zone, move your stop loss to break even to where you would have entered the trade. You almost, or even possibly would have gotten stopped out of break even on the second half already because there's so much volatility today. But if not, then, you know, you've basically got in the absence of any major gaps down overnight into the open, you basically got a risk-free trade on that you've taken profits on half of it, and let the rest of it run until you get to, the next major resistance level. So yeah, today, fortunately or unfortunately, depending on how you traded this, if you did, the range on the day was so high. Looking at today, our low at 391 with a high of 448. So, almost about a 60-point move on the range. That's a huge range to deal with, but it was off a major support. So great example. Thanks for sharing that. It was a fun one to look at. All right. So any final questions before we sign off for the night?
No, that's all we got.
Cool. All right, guys. Well, thanks so much. It was great having everybody on. Great to see a lot of the new folks from Las Vegas last week. Glad you guys survived the trip home, and welcome. And we will see you guys next Tuesday, same time, same place. If you have any questions in the meantime, please email us at support@altostrading.com. Take care. Have a great rest of the trading week, and we'll see you next Tuesday.